This is MacroVoices, the free weekly financial podcast targeting professional finance, high net worth individuals, family offices, and other sophisticated investors. MacroVoices is all about the brightest minds in the world of finance and macroeconomics telling it like it is, bullish or bearish, no holds barred. Now, here are your hosts, Eric Townsend and Patrick Ceresna.
MacroVoices episode 501 was produced on October 9th, 2025. I'm Eric Townsend. Lynn Alden took first place on our top 5 macro guest countdown, concluded with last week's episode number 500. But guess who actually beat Lynn for the single episode download count title? That's right, it's Freelancer.com founder and CEO Matt Barrie, whose interviews on artificial intelligence have all been listener favorites. Matt and I will discuss all things AI in this week's feature interview. Is it a bubble about to burst or a new secular trend that's just getting started and will soon be bigger than the internet itself? And what happens when the masses start to revolt after hyperscalers consume all the new electric generation capacity that we can possibly bring online in the next decade or two? That's all coming up in this week's feature interview. Folks, I've been traveling internationally all week, and I have to confess I'm not quite as in tune with markets as usual, so I'm going to defer to Patrick for most of this week's Postgame segment, and don't worry, he's going to have plenty of charts for you. And we'll also have the new listener favorite Trade of the Week segment right after the feature interview with Matt Barrie.
And I'm Patrick Ceresna with the Macro Scoreboard week over week as of the close of Wednesday, October 8th, 2025. The S&P 500 index up 63 basis points, trading at 67.53. It continues its relentless rise. We'll take a closer look at that chart and the key technical levels to watch in the post-game segment. The US dollar index up 115 basis points, trading at 98.82, breaking out above key levels, begging the question if the US dollar is setting up for a squeeze higher. The November WTI crude oil contract up 125 basis points, trading to 62.55, bounced this week, but has a number of key technical hurdles ahead. The November RBOB gasoline up 106 basis points, trading at 191. The December gold contract up 444 basis points to 4,070. Gold cleared that 4,000 mark for the first time. The December copper contract up 430 basis points to 509, back above $5. And uranium down 650 basis points, trading to 77.65. The U.S. 10-year Treasury yield is up 3 basis points, trading at 4.13. And the key news to watch next week is the CPI and PPI inflation numbers, as well as watching the ongoing government shutdown and its impacts on the release of key economic data. This week's feature interview guest is Freelancer.com founder and CEO Matt Barrie. Eric and Matt discuss the future of AI, the AI energy consumption challenges, market dynamics, and AI regulations. Eric's interview with Matt Barrie is coming up as MacroVoices continues right here at MacroVoices.com.
And now, with this week's special guest, here's your host, Eric Townsend.
Joining me now is Freelancer.com CEO Matt Barrie. Really interesting story, folks, how this one came together. We were trying to figure out who the top 5 macro guests were. You already know about the countdown. You know, Lynn Alden was the big winner. Okay, believe it or not, those were just the macro guests. The number 1 all-time download champion episode of MacroVoices was actually a Matt Barrie AI interview. And the thing that's really striking to me is people like Luke Groman and Lynn Alden spent half of their careers building their following and promoting themselves and so forth. Matt's not even a guy who promotes himself, yet he's done more downloads in a single episode than any of our guests that do. And it has to be this amazing topic of artificial intelligence. Matt, anytime something like this happens, public internet AI, it leads instantly to the obvious debate. Okay, is this a bubble that's about to burst, or are we just getting started? Or, where are we in this story, and how should we think about it? Are we coming up on the .com bust, or are we just getting started?
Well, if you think back to the .com days, and there are a lot of parallels between then and now, Cisco got to $500 billion market cap, which is about 5% of US GDP. And if you thought that is a bubble, what do you think about NVIDIA at $4.5 trillion market cap and 15% of US GDP? It's become an absolute behemoth. It's about 7 to 8% of the S&P 500 market valuation. It's doing about 6 or 7% of revenue of the S&P 500. It is an incredibly profitable business. It does about $160 billion a year of revenue and about $100 billion of EBIT, which is insane. It is built upon a very interesting foundation. They're released in the latest financials that the top 2 customers of NVIDIA generate around 40% of the revenue. And the next 4 customers generate another 40% of revenue. And it's believed to be that the top customer is Foxconn and the second top customer is Quanta. And these are 2 Taiwanese manufacturers of boxes that put NVIDIA chips in them. And number 3 is another Taiwanese company called Wistron. And below that, so your Dells and your Supermicros. So you've got an incredible customer concentration. The top 6 customers, top 3 being from Taiwan, but the top 6 customers are about 80% of the revenue and top 3 customers are at 50% of the revenue. And then you look at the product segments that NVIDIA produces. I mean, 88% of their revenue is currently coming from data centers. So it's kind of interesting. And then, out of the $100 billion of EBIT, the biggest supplier to NVIDIA is TSMC, which has got, just like NVIDIA has got 60% concentration of the semiconductor market, TSMC's got 70% capture of the foundry market. And so you've got this incredible revenue story, incredible revenue growth. It's all been on the back of data centers. It's all concentrated into 6 customers, of which 3 are in Taiwan. And really, the NVIDIA story, which is really holding up the entire market, is built upon a fault line, one island, 3 customers, 1 foundry, and a prayer that the geopolitics that shakes Taiwan is less than the geophysics underneath the ground. So it's a pretty interesting thing to look at. And if you look at that, so you look at that revenue number of $160 billion a year, which is about $40 billion a quarter, the entire AI compute space, so we're talking OpenAI, we're talking Midjourney, we're talking Anthropic, etc. That entire AI compute segment in its totality is less than $40 billion of revenue a year. And every single one of those companies is losing money. The entire ecosystem is really built around NVIDIA and a whole Taiwan story underneath it. So the more you dig into these numbers, which we'll do in a second, I'm sure, the more, the crazier the whole thing gets. And that's in the backdrop of a pretty frothy, overheated market. I mean, of over 10 times. That's already passed the dot-com peak, which was about 25%. And back in the dot-com days, revenue growth was about twice as high. It was about 20% year on year. So that's where we are. And it's kind of interesting with that basis of where we are today of what the projections are for tomorrow.
Matt, this industry has already spent an incredible amount of CapEx. It seems like the interest in it is unlimited. There's probably unlimited capital that wants to chase this. Well, wait a minute. You're going to run out of energy at some point. We'll come back to that later in the interview. Is CapEx unlimited? Is it limited by energy? Is it limited by something else? When does this stop?
Well, obviously, there's an incredible amount of money being spent, not just on NVIDIA, but in the CapEx to build the data centers to put the machines that have NVIDIA chips in them. Einhorn came out this week from Greenlight and said this could be the biggest bonfire of money since the dot-com boom. If you look at the amount of money that the big sort of hyperscalers are spending, I mean, the likes of Microsoft and Google are spending at the moment around 50% of earnings on their CapEx. And the Metas and the Oracles and the Amazons are projected at the moment to spend about 70% of their earnings on CapEx, with next year potentially up to 1.3 times their earnings. So if you think about the dot-com boom and you think about the telco boom and bust that happened there and the optical fiber boom and bust that happened there, at its peak, AT&T, when it was dominating the market, and it had about I think it was about a 60% market share back then of telecoms. It was spending at its peak about 72% of its earnings on CapEx, and Exxon was spending about 65% of its earnings on CapEx in the shale oil boom, and they're kind of the peak of CapEx. So we're really reaching the point of CapEx to earnings that hasn't been really paralleled since the railroads were laid across America, and those numbers are getting to a pretty insane predictions. I mean, I think Altman came out just recently, and I think Jensen's kind of backing them up on this, that they plan on spending by 2030 $7 trillion on CapEx. Now, if this sounds like a big number, it is. That's about 1/3 of the M2 money supplier in the US. And how are they going to finance that? I mean, a lot of, in fact, possibly most of the CapEx is being financed by ads. So what are you going to do? You're going to finance $7 trillion of CapEx on banner ads? The advertising market's kind of interesting to look at. In the last 100 years, advertising as a percentage of US GDP has never really changed from about a 2% level. The composition of advertising in that spend has changed. So digital advertising now is the lion's share. That's about 75% of advertising spend. But in the US, it's 2% of GDP. In Australia, for example, it's 2% of GDP. I mean, worldwide, it's about 1% of GDP. But in the rest of the world, you don't really have a strong consumer market like you do in the US and so forth, in the Western economies. So there's pretty limited ability for Meta and Google and so forth to increase, I think, their advertising. I don't think that increasing more ads in the feed or placing more banner ads on the page is going to be able to sustain a ever-increasing, exponentially growing CapEx spend. And if it's not ads that's financing this CapEx spend, it's cloud. And so, you've got three major players in cloud. You've got AWS, you've got Microsoft Azure. And I was very surprised actually to see that in the last quarter, Microsoft's actually overtaken Amazon in terms of their revenue. It's about, I think, $47 billion in the quarter versus AWS's $29 billion. And then third place, you've got Google Cloud. And, for a long time, there were pretty decent margins. But now with the AI, sort of CapEx boom, those margins are eroding quite dramatically as the CapEx spend's ramping through the roof. And you've got now fourth and fifth players coming into the market. So you've got Oracle now trying to enter the market, and they're trying to do it on price. So they're saying they're going to undercut the cost by about 40%. And then behind that, you've got sort of CoreWeave and the Neoclouds coming in. And if you reflect back on the .com days, AT&T had one analyst, I think, said better profit margins and drug dealing. When it was just three players in the market and they had 60% market share. And again, that's kind of the market share that Microsoft has in software, and that's the market share that NVIDIA has in AI, and it's the market share that TSMC has in foundries. And now, if you look back at the telecoms boom, when the fourth player and the fifth players came in, all the economics just fell apart because of the CapEx. So, you've got that dynamic happening now in the market for AI data center build out. And the funny thing behind all of this, it's the demand isn't there. They're all building this out ahead of time. And if the money's not coming from banner ads and it's not coming from cloud, it's coming from VCs. So you've got huge amounts of money sloshing into the space. The numbers are absolutely astronomical. NVIDIA, I said they're doing $160 billion a year in revenue, and the rest of the AI compute space is making less than $40 billion in totality. And losing money. Well, each of these big hyperscalers, they're spending, they're anticipated to spend next year, $100 billion plus or minus $20 billion on CapEx alone. And they're not even doing that in revenue. I mean, AWS at the moment is doing about $110 billion a year in revenue. And that's going to be spent in its entirety next year on CapEx just by each of those hyperscalers. So these numbers are astronomical. I mean, back in the .com days, at least when you had that boom, the software market generated around $300 billion of revenue in its totality and employed about 1 million people. I mean, this AI boom is generating, 20, 30 billion a year in revenue. It's hard to tell because all the companies are private, losing money and not employing anywhere near as that level. And in fact, if anything, they're saying we're going to take everyone's jobs away and create unemployment. So, the numbers are very fantastical. And the more you dig into that, the more you dig into just how big those numbers are. I mean, I just saw literally about an hour ago, Mark Andreessen tweeted an interesting graph. It was US real GDP growth contribution from tech CapEx. And at the moment, in the second quarter of 2025, the US real GDP growth is around 2% per annum. And half of that is CapEx from big tech. And they want to lift that CapEx from $400 million to a $7 trillion spend by 2030 in totality.
Matt, as you know, energy investing is my personal passion. And I got to tell you, this AI one is a completely different ballgame than anything else I've looked at. I'm not really thinking about, okay, what's the demand of this and the supply of that? I'm thinking this fundamentally changes society in a way where potentially AI consumes so much energy and it needs it to grow that it exacerbates an energy price escalation that I think was coming due to inflation anyway. And all of a sudden, you've got everybody feeling like AI is both stealing our jobs and consuming our energy. It has to be outlawed. It has to be shut down. And I think it potentially adds to a social divide that's already kind of out of control. So to me, there's almost nothing you could say about the scope of how much energy it's going to use or what the consequence of that could be that would surprise me. I have to admit, though, I'm kind of a narrative-oriented guy. I haven't done enough homework to have any data to back the things I'm saying. Am I crazy to think it's that big? And how big is it?
Well, in all these things, in all these bubbles, you have blue sky and then you have reality, and energy is kind of where the reality practically starts to hit. Data centers are drawing huge amounts of energy from the grid. In the US already, it's about 4.5% of the whole US energy demand, and projected to go to 9% by 2030. And this is at a scale now that it's causing real problems for a lot of different countries around the world. In fact, Bloomberg just came out with about a week or so ago with an analysis of energy prices in the US, and they found within vicinity of data centers, I think they looked at within 70 kilometers of a data center, they did a survey of wholesale energy prices in the United States, and they showed that within the last 5 years that those prices have gone up 267%. So you can imagine the average person in the street's probably not very happy if their bills got triple to power someone else's chatbots. At the same time, it takes a long time to put energy generation on the grid. It's highly political, as you well know. You were just out here in Australia, and even though we're an energy superpower in 5 different capabilities, uranium, coal, gas, we've got some oil, etc., we're not allowed to use most of it. We're shutting down coal plants, etc. So it's very hard to get new supply on the grid. The average data center now is 300, 400 megawatts going to a gigawatt. If you try and put that on a lot of city grids, you'll brown it out. So in addition to grid capacity problems and energy price problems, you've just got the practical reality of building these things, right? Schneider Electric has an order book backed out till 2030. So I don't know how they're going to get this CapEx done. At the moment, they're drawing down the capacity that's come from the office market rolling off. So as the work from home and the COVID thing kind of hit the office market in the US and other places around the world, there is some construction capacity that's been drawn down to build these data centers. But if you can't get the electrical transformers and the switching equipment, and you can't get the builder to be available at any reasonable price to build the data center, and then on top of that, AI demand is moving electricity markets like OPEC used to move oil, you're going to have some real problems in terms of your ability to actually deploy this. And then at the end of the day, the economics aren't there because no one's making any money yet other than NVIDIA. So you've got this whole infrastructure that is built upon a great story, a great promise. And I do think in the long run, it's very similar to dot-com boom in that, I think I said this in one of the last MacroVoices episodes, right? Cisco, networks. That's their motto. That's their tagline. The internet got deployed around the Western economies. People thought, everything's going to be on the internet. Your clothing will be connected in a personal area network to your watch, to your handheld device, to this, that, the other, to your computer, or to the world. And Cisco makes all the routers, the switches, the hubs, and ultimately the chips that will network the fabric of mankind and industry. And so they're going to be the richest company in the world. And you kind of look at AI, and it's a very similar issue where you kind of go think, well, AI is going to power everything. It's great for highly personalizing experiences and really taking automation to the next level, which is the very essence of computer science. And but we may be getting ahead of ourselves in the stories here. You've obviously got some personalities that are great, showmen. Your Sam Altman's one of the P.T. Barnums of our time in terms of weaving a story and telling a story. But the numbers now are so fantastical and so large and just so incredulous that you have real constraints in the physical world building up with numbers that keep adding zeros to them. And then at the end of the day, that may be way ahead of where the current usage is in time. Just like, we had the telecoms blow up and the dot-com boom. The law of computing basically is that, ultimately you will use up all the memory, all the bandwidth, all the disk space, all the CPU capability available to you. But it may take some time to get there, and you may have a massive overcapacity for a period of time as people get over exuberant.
At the beginning of the public internet and then the ensuing dot-com bubble and so forth, there was a lot of contention over completely unorthodox business models, Google giving all kinds of things away just to establish market share, which seemed crazy, but it was actually very effective. It seems to me like we're going through the same thing again. And I've got to tell you, I went from ChatGPT 3, I kind of felt like it's a cool novelty, but I'm not going to spend $20 a month on this thing. Now at ChatGPT 5, I've got the $200 subscription. I wouldn't go down to the 20 if you paid me to, because I just, even for that small little edge, I really value it. And I would frankly love to be offered the $500 a month option because I've come to use it so much. Okay, if they're mostly only able to sell the $20 option, is this business staying? How do they make money doing this?
It's clear that there's no sustainable business model with a foundational model at this point in time. There's zero switching costs. If OpenAI, deep research O3 is better than Sonnet, whatever, from Claude, I immediately switch my activity there. And I'm sure you do the same as you just go to whatever the latest, greatest is. There's nothing holding you back. And so what's very obvious, though, as you become more of a power user, and I do spend a lot of my day, admittedly, in GPT, making all sorts of queries, etc. When you kind of run out of usage in your $20 plan or your $200 plan or whatever the plan is, the platforms don't say, please put in your credit card and buy more credit. They say, you're on a timeout in the naughty corner for 6 hours, 7 hours, six days. And in some circumstances, I was given a several-week timeout on one of the platforms. So you can tell that they're actually, the unit economics of inference is not there. They're not making money on you actually using the product. It's more like a gym membership. They're making money on you not turning up and paying the subscription. And this is a real tangible problem, that you're getting like this incredible build out and data center usage for companies that are completely unprofitable. And you may be willing to pay $500 a month for greater usage of your model. I would think that would still probably be unprofitable in your usage at that level. Are you prepared to pay $2,000 a month, $20,000 a month, or whatever the true number is for profitability? I don't know. One of the big use cases that are coming out now, which is burning a lot of tokens, are these sort of AI enabled integrated development environments. So you see like your cursors and so forth, where programmers can get autocomplete on steroids, effectively writing software. Cursor makes no money on that token burn. They've got an incredible revenue ramp rate. In fact, they're one of the only 3 companies in the entire AI compute space that has $500 million a year or more of annual recurring revenue. And note annual recurring revenue, not revenue. There's a lot of funny calculations being used to kind of project the hype. But 100% of Cursor's revenue is sent to Anthropic, who provides the underlying foundational model to basically power their product. And they're not making money. Anthropic's not making any money. They're losing money, losing billions a year, etc. And at this point in time, even companies like Perplexity is sending 165% of their revenue to the underlying foundational model providers to run their search service. And then those foundational models providers are sending it off to the cloud computing guys, who are sending it off effectively to NVIDIA, who's sending it to TSMC. So what do these companies have to do? So the OpenAIs of the world, they've come out now saying, okay, we're not going to make any money on $20 a month. We're not making any money on $200 a month. We have to come up with some sort of a story to justify these sky-high valuations. Now, we'll note that OpenAI has raised about $64 billion worth of money, I think, today. And so, and they've done it at a $300 billion valuation. They're about to sell some employee stock. I think they're upsizing the employee sell down round at a $500 billion valuation. So it's interesting. The OpenAI guys are kind of cashing out. By the time that's done, they'll cash out about 11 point something billion dollars worth of stock, and they're only doing about $4 billion of revenue and a half, $4 billion of revenue and a half, and they're losing $8 in the first half of this year. So to promise to provide a justification for these sky high valuations, they've got to come up with these fantastical stories. And the latest story I saw from Sam Altman about 2 weeks ago was that 40% of people will potentially have their jobs taken thanks to AI. And by implication of that, what he's saying is that OpenAI will generate the income that 40% of people would in the past be paid, and that's going to be the revenue stream in the future as they kind of take over all these different categories of work. Now, if that were remotely true, they would launch jihad on Sam. They'll burn down the OpenAI headquarters and they'll put an axe to the data centers, and governments would regulate and ban it, right? I mean, the Great Depression, unemployment was around 32%. And so these numbers are extreme. And to date, I still don't know of, and I know there's dislocation that's going to come in certain segments, but I still don't know someone amongst any of my friends or even online who could put their hand up and truthfully say, I've lost my job thanks to AI, despite all these stories around agents and so forth and so on. Now, I do think it's going to come in some parts. I think, in customer support, in some areas of sales, in some areas of administrative work where people have highly parallelizable task-based workflows, which lend themselves very highly to automation, and very, very good automation, I will say. Because remember, the whole art of software is around automation. So, this is really just taking things really to, a 10x step up. And I think you can do some of those task-based functions very, very well. It's still not there yet. I mean, nobody is making a profit doing this yet, but it is coming. But it's not going to be on the scale of 40% of the people in the world being unemployed. And so you've got this, if you just step back and just look at the ecosystem, right? So you've got NVIDIA, 160 billion in revenue, 100 billion in earnings. They're making bank. And then you've got this whole ecosystem around them basically pumping NVIDIA to the moon in terms of their revenue and by result of that, their valuation. None of that around them is making any money. You've got OpenAI pitching all sorts of fantastical things. You've got to remember that they still have to revenue share with Microsoft. They're still a non-profit, this, that, the other, but they're talking about $1 trillion a year of CapEx, $7 trillion by 2030. There's the whole Oracle deal, which we should talk about in a second, et cetera. And they don't have the money for any of this stuff. And it's almost, it kind of feels much bigger than Enron in terms of the look and feel of the whole story around OpenAI and all the funny things that are happening now around the financings in the space and the justifications for how the CapEx is going to occur. And by example of that, there was what they're calling now on social media, I think Elon called it the infinite money glitch. You've got this announcement by Oracle that have just come out. So, the other day, Oracle's share price jumped by about 39%. Because they had like this big, it was like $380 or so billion worth of cloud compute bookings that they've got out till 2030 or so. Now, Oracle hasn't built their cloud yet. They're saying they're going to build one. They say they're going to do it on a price competitive approach of roughly a 40% discount, et cetera. But they showed this order book, and the order book was quite interesting actually when it came out because it was like a hockey stick. I think it was like 2026, it was like 18 billion in bookings. And then the next year was 32 billion. The next year was 73 billion. The next year was 114 billion and 144 billion. And so they showed this huge hockey stick ramp and their share price went up 39%. But then like a day or so later, I think it was the Wall Street Journal published that 300 billion of that is OpenAI. Now, OpenAI is only doing, $4 billion a quarter of revenue. They don't have $300 billion to spend. But what they've done is they've done this deal with Oracle where they've committed to this order book, and off the back of that, Oracle's share price has pumped, and then in parallel with all of that, so Jensen's come out and he's now offering, this is the infinite money glitch. So he's offering $100 billion worth of GPUs to NVIDIA under vendor financing. So he's effectively saying, take the GPUs now, pay me later for them. And then what OpenAI has done with those GPUs is gone to CoreWeave, and CoreWeave is a Neocloud, and we'll talk about them in a second. That's like the new generation cloud, AWSs and Azures and so forth. And it's gone to them and said, okay, well, I've got these $100 billion of GPUs. I'll give them to you to kind of to use, and I will book with you $22 billion worth of compute over the next couple of years, and that'll be take or pay. So I'll lock that in, and I'll guarantee that I'll spend $22 billion with you. CoreWeave is then going off and going, look at my bookings. I've got $22 billion of the bookings. And then OpenAI on the flip side saying, look, I've got $22 billion of committed spend I'm going to make on compute. So I must have a big customer pipeline. So pump my valuation and give me a sky high $500 billion thing so I can do $11 billion stock sell down. And then CoreWeave is saying, well, I've got $22 billion of bookings from OpenAI. I'm going to go to the private credit markets and JP Morgan and Goldman Sachs and so forth. And I'm going to raise money in the debt markets from private credit, the lender of last resort. And what I'm going to do with that is I'm going to take that money, I'm going to go back to NVIDIA, and I'm going to buy the data center gear that to build out my AI GPU powered data centers. And the money just goes around in a circle, and at no point in time yet has a single customer spent $1. And so you look at all of that and you kind of go, well, if you sanity check the numbers, and there's actually a really interesting blog called Where's Your Ed At, which I encourage everyone to read, where someone's gone looked into this in far more detail and just gone through the numbers, et cetera, and so forth. And if you believe the Oracle story, and if you believe about this $300 billion in spend, then what that means is that in 5 years, Oracle is going to single-handedly grow the AI compute market 500%. They're going to take it from sub 40 billion to 200 billion. They are going to overtake AWS, by I think 2029 with AWS does about 115 billion a year in revenue, and by 2029, Oracle is predicting they're going to do that from their cloud business and then overtake it to 144. So they're going to do that, and the whole thing is going to come from one customer, being OpenAI, who doesn't have the money. And I actually, before coming in here, I just checked Oracle's balance sheet. Oracle's a big business. They've only got $11 billion in cash. So these numbers of $100 billion a year of CapEx for each of these companies, $400 billion up until now, $7 trillion being a third of the M3 money supply that somehow is going to be financed with ads or cloud or VCs. I mean, the numbers are just insane. And it's just, all this infrastructure and all this whole environment is built around NVIDIA, who's making all the money. It's the only one making any money other than TSMC. And then you've got this new paradigm coming in with the Neoclouds, right? So the Neoclouds, that's CoreWeave, it's Lambda, and it's Nebium.
Matt, hang on a second. Neoclouds, I have to admit, I don't know that one. Fill us in.
Well, it's one of those things where, from time to time, I kind of browse the internet and I kind of see these new businesses that pop up that look like they're very, very large businesses. And I just kind of think to myself, I must be really stupid or just not understand. And so you kind of, read through their website and so forth, and you go, wow, this is kind of really cool. It's like really advanced. It's really huge. It's a whole industry I didn't know about. These are next generation cloud computing providers. So these guys are aiming to provide the GPU powered version of AWS or Azure. And they're coming into the market as sort of the fifth entrance, the sixth entrance, and seventh entrance to compete against those incumbents. And the interesting thing about these companies are, obviously, I've talked about the infinite money glitch, where it seems to be like a bit of a circle jerk going between NVIDIA, OpenAI, CoreWeave, and they're all kind of using the same money that's just sloshing around in a circle. And these Neoclouds, they're kind of like the WeWorks of GPUs, right? It's basically take in some pre-bookings, use those pre-bookings to raise some money, rinse, repeat, and go in a circle. And these guys are building out infrastructure, and they've got huge spend. I think they're spending about $50 billion a quarter. Those three, they're financed by by NVIDIA and by the customers of NVIDIA. So, for example, Supermicro funded Lambda, and they're basically just building out data centers that are GPU powered. Doing so in a very much a build it and they will come sort of business model, because to the best of anyone's knowledge at this point in time, they're not really making any money outside of your traditional OpenAI's, Metas, and of course NVIDIA itself. And it'd be interesting to see where NVIDIA is going with this, because ultimately it feels that Jensen's heading towards his own foundational model being launched on NVIDIA hardware, but we'll see if that happens or not. But these Neocloud providers are basically trying to enter the market, and through pricing and through arguably a better product, because it's using NVIDIA GPUs rather than your traditional CPUs, et cetera, basically trying to enter the market and capture potential huge revenue streams in the future that may or may not eventuate. So, I think CoreWeave has spent this year about $20 billion building out their infrastructure, it just feels like a very, very strange business model if you kind of get to the bottom of it.
Matt, I want to move on to the social implications of this. As I get my head around this, I'm increasingly convinced this is much bigger almost than anybody is thinking about or talking about. And I'll use this idea of the so-called competency crisis that people have talked about. Let's use Uber as an example. Back in the day, getting a job as a limousine driver required a fair amount of skill. You had to make sure you knew how to find addresses and so forth. Well, they dumbed that job down to the point where it's just so idiot-proof with a moving map in front of your face that shows you exactly where to go that just about anybody can be an Uber driver. And my prediction is AI is going to make it so that just about any numbskull who's got some kind of device that they can use AI for is suddenly qualified to do all kinds of jobs that they might not even understand, but they can still get through it because they got AI to coach them. It's like they've got their own personal little coach for it. If that's where we're headed, I think it dumbs down society. Why the heck would you want to graduate high school or even bother finishing, never mind going to university, if a lot of the jobs that are out there, you just need to learn to operate AI and, that's it. So is that where it's headed, or what do you think the social implications can be of this just huge explosion of AI into society?
Well, and in some regards, we're going to see a huge spike in the Dunning-Kruger effect as a result of everyone will become an expert in 15 seconds from querying something on ChatGPT without doing the hard work to learn something over a period of years. Look, what I see is, generally what we are seeing, so I've got 83 million people in my marketplace who are using AI for every type of job you can imagine now. We're seeing a big lift in skills, right? So, I think I've said this before. If you're an average copywriter, you're now an exceptional copywriter with GPT or Claude. If you're an average illustrator, now you can become exceptional quite quickly with your mid-journeys and the like. The same thing's going to happen in all the white collar trades, whether you're a programmer or whether you're industrial designer or an architect or what have you. So it does dramatically lift the skills of people. I think it's like the world when you went to work, and I was kind of just at the cusp of this when I kind of entered the workforce. We kind of, you entered the workforce and there used to be no computer on your desk during the day, and then you came to work and there was a computer on everyone's desk, and all of a sudden everyone was a lot more productive and so forth. And yeah, you had some dislocation and a lot of jobs kind of went away. The typing pools of secretaries in large companies disappeared, but they got redeployed, et cetera, ultimately to different jobs, et cetera. I do think that skills lift, we're seeing a lot of productivity, we're seeing a lot of liquidity. So for example, our contest functionality where people can put up a prize and people compete for the prize, and we do that all the way from simple things like logos right up to $6 million gene editing innovation challenge for the NIH. We are seeing a lot of entries coming in a lot faster, a lot quicker, a lot higher quality. In fact, we had to recently rate limit that because we're getting over 700 entries per contest. So we're getting a liquidity effect, and a speed effect as well as a quality effect and a bang for buck effect. So all in all, you can probably encapsulate in the word productivity goes through the roof. But yes, on one hand, if you're at university and you used to cheat by looking up Google the answers, that cheating is now on steroids by getting GPT to do stuff for you, and that's certainly going to continue. And if you get your Big Brother to do your homework, or you get Google to do your homework, or you get Wolfram Alpha to do your homework, or you get GPT to do your homework, and you're not learning the materials, you're going to really, really suffer. The flip side of that is that AI is going to be probably the most powerful forces in history for education, in that it will be able to personalize a lesson plan for you. And just like what your pace is that you want to learn at, and I know you, Eric, are very, very good at asking AI the right questions to really maximize your learning rate on a new topic or a new area and so forth. And the same for me. It does have the power, particularly is from the high school to tertiary education and above, really empower the ability for people to learn new skills, new trades, new knowledge super quick. Now, the question is just going to be, and this is one of the big questions, the $1 trillion question that you kind of look at when a lot of these AI guys hype these models to the moon, is will the AI be able to create new knowledge and do independent scientific research and come up with new things and new inventions? And will we enter this sort of hyped up AGI, super singularity sort of event horizon? Or is it just a really, really good autocomplete that may be better than any autocomplete you've ever seen in your life? While it can find correlations and this, that, the other, it does struggle to kind of find new advances, to push scientific breakthroughs. That's going to be the big question. And I use as a litmus test for that, will we see sort of creativity emerge from these models? And, for example, will there be a song trending in the top 100 soon that's going to be completely done by AI, designed, composed, produced, and executed and deployed by AI? Are we going to start seeing that with literature? Are we going to start seeing that with music? Are we going to start seeing it with entertainment? If that starts to happen, we might also be there with scientific progress and technical advances. Or is it going to start capping out, and there are real fundamental limits on access to data, which is fundamental? All the cheap oil of data has kind of been drilled out and used to train these models. And now, increasingly there's tariffs, rules, regulations, and restrictions on the ability to use it. And is that going to be, which is required exponentially more, with every generation of the models that are coming out, is that going to be the fundamental limit? And in fact, we get a computer on our desk. That computer is faster, better, 10x better than you've ever seen before, and everyone's going to be super productive. But there is going to be a limit from where it's going to go from here, particularly in the practical reality that the underlying economics of this AI at scale is not actually working.
You mentioned something at the beginning of that answer I want to come back to, which is the fire hose, the excess amount of productivity. I've felt this myself, Matt, on your platform. I've been using Freelancer.com for several years now. If I need logos, graphic things I'm really bad at, just hire somebody. It's amazing to me using the contest function. A few years ago when I started using that, boy, I could put up a $100 contest and a whole bunch of well-qualified designers would submit over just a few hours. I'd have a bunch of really interesting designs. I get to pick one. The guy gets $100. It was just a great deal. Well, recently, I thought, hey, I'm going to up it to $300, and I really want to do a good one this time. What I had no idea was coming, Matt, is if you put a $300 contest on Freelancer.com, you better have a staff of people ready to help you sort through the thousands and thousands of submissions you're going to get. It's that much. And it's literally to the point where I feel like I need AI in order to filter all of the AI proposals, because all of a sudden that freelancer community has so much capacity that I literally can't give each designer a fair shake or a fair chance because there's just so much coming. And I mean, that's a good thing, kind of, but it also presents a problem.
Yeah, no, when you mentioned $300 in graphic design, you're going to be overwhelmed.
So I mean, I sabotage myself by paying to, and think about it. Just a few years ago, $300 if you wanted a logo done by a professional graphic designer, where you're going to get one person's best attempt, and they were going to put a few hours into it. That used to cost $500. I only put $300 in the contest, and the result was I almost couldn't use any result because in order to, I mean, not that I didn't get plenty of value back for my $300, but I didn't have time to sort through it all and pick one in time.
Yeah, we recently had to deploy something to actually rate limit the ability for people to enter in contests, and we're going to use AI to actually sort through and so forth, and rank and so forth. But also the reputation system as well. We order all the entries now by basically the quality of past work of the particular entrants. But you are right. I mean, we're definitely seeing a lift in not just the quality of work that people produce, but the speed at which they can actually do it, and ultimately the bang for buck, value for money. I mean, what we have is an incredibly deflationary business. I think NASA published a white paper a while ago. Between 80 and 99% of what they'll traditionally pay are going to traditional labor arrangements, and we are steps to make it manageable because there is an absolute explosion in productivity.
Matt, final question. Tell me about Sam Altman, your sense of him, his sincerity, his intentions, whether he's a good guy or a bad guy. I have to admit, I can't read it. I thought his interview with Tucker Carlson was incredibly revealing. I'm not sure exactly of which. And there was a tweet also, which really kind of got my attention because I've seen this before. I know you guys in Australia went through this with social media, and we need to protect the children. We need to protect the children from profanity and bad things on social media. So therefore, everybody is not allowed to use it until they identify to the government with a government ID exactly who you are before you're allowed to log into your social media site. Sounds to me like Sam Altman is pushing for the same thing for AI, and I don't trust his intentions. Am I being paranoid? And more broadly, what do you think of this guy?
Yeah, I think you always have to kind of take a look at what's been said and kind of just think about it kind of carefully and think through kind of what's really going on. I'll take the second question first, and we can come back to the Tucker Carlson interview. So he said that I think in the context of he was saying that they're going to allow adult content on OpenAI, and as a result of that, they need to protect the children, and therefore they're going to do age verification. Well, there's a few things going on there. Obviously, Elon has been using sexualization of content, I guess, for want of a better word, on Grok to try and encourage a bit of a cult following of the Grok AI.
But hang on, time out. There's just only one sane way to do that, which is to say if you want the adult content, then you can opt in at your sole personal discretion to show your ID. That's not what he's pushing for. He's saying everybody has to show their ID in order to be able to use the thing because they're not going to, it doesn't make sense.
Yeah, so on one hand, Elon's kind of saying, well, we can get a Grok that's uncensored. And I think if you look at the sustainable competitive advantages between the foundational AI models, there's basically none. They all do the same thing. They all can write a story for you. They all can give you advice. They can all generate an image, etc. The only different competitive advantage is how censored they are and how left-wing biased they are in the training, right? And Elon's kind of said, well, you can come to Grok and you can talk about anything, and we're not going to censor you, and that's my advantage. Now, maybe Sam is saying to himself, well, the internet. I think last time someone published something, 80% of the traffic on the internet is Pornhub, and so maybe on one hand, Sam's saying, okay, well, how do I get usage up of my AI, and what are people potentially willing to pay for? I don't know. Maybe we'll go into kind of like the pornographic style content, and maybe that will get more people subscribing and more usage. I don't know. What I think is probably really going on is, in Australia, for example, we've got effectively a censorship division of government, which is run by someone who's nicknamed Karen. And in December of this year, the law comes in place, which is already passed through government, under the guise of protecting the kids. Every single social media platform in the world that operates in Australia will need to do age verification to prove that you are not under 16. Now, that has absolutely nothing to do with protecting the kids. and everything to do with requiring digital ID to be rolled out in Australia so that everyone on the internet can be identified as the source of a comment on Twitter or on a YouTube video or whatever it may be. In fact, our Prime Minister, Anthony Albanese, some years ago, there's a clip online where he was asked if he was ever going to be dictator for a day, what's the one thing he'll do? And he said ban social media because he's not so thick-skinned and doesn't like people talking about things on the internet about him. So this law is coming in. Now, the tantrums are going to be insane. Obviously, they just tried banning social media in, was it Nepal? And everyone rioted and set fire to Parliament and so forth. But the ramifications of trying to stop people saying nasty things on the internet is more than just X and Facebook and Instagram and so forth. The e-safety commissioner is now looking at whether to ban Roblox, Legoland, and GitHub, because they're all places that people can leave comments, etc. So that shows you how kind of insane this law is. And so by virtue of that, they've also said they're going to require it for search engines. Now, AI is basically a modern version of a search engine. And while we have not seen, I think, yet substantial deviation away from Google and the traditional search engines to the chat-like interfaces for search, that's basically what a lot of people are predicting. And I believe the reason he's rolling out the age verification is because he knows that the e-safety regulator is going to require them to do age verification. And Starmer over in the UK is now trying to push digital ID as a excuse of what he needs in place in order to solve the mass immigration problem that he's been running at full speed over there as well. And it's causing all sorts of social unrest. And he's saying, well, all these people coming across from Africa into the UK, we can't stop them from working unless we have digital ID. Although he was pulled up this week, said, well, they've got to show a national insurance card. And if they're not doing that, they're getting work anyway from doing illegally working and not showing an insurance card. How's digital ID going to help? They're still going to work the same way. But I think I don't know what's going on there. There may be a bit of confluence of events, but I kind of feels that he's just getting ahead of that because there's quite substantial fines for the companies that allow kids to operate on them. And it'll be interesting to see where it plays out and whether they're actually going to ban GitHub. And I come home and watch YouTube at night sometimes, and I watch prospecting videos and geology videos and how to repair old electronic equipment or what have you. It's a fantastic resource for kids. But they're going to ban it. So I get the feeling that they're just going to apply that rule to OpenAI as well. In regards to your first question, I was pretty amazed by the Tucker Carlson interview. Isn't Tucker an incredible interviewer?
That interview pissed me off because we had this scheduled and I was thinking to myself, boy, we are going to rock it, Matt. We're going to do the best AI interview ever done. And Tucker blew me away because that guy is not technical at all. And he absolutely nailed that interview.
It was like a story arc rivaling Breaking Bad. Watching that interview, just how you set it up and kind of for those of you who haven't watched, I highly encourage you watch it. It's an incredible work of art from Tucker. Yeah, it was kind of interesting. Obviously, all these guys who run these multi-billion-dollar companies talk a big game. They need to talk a big game because the whole venture space is kind of like a Beza Powell law of investing. You got to kind of swing for the bleachers, and you got to get one investment to return a phenomenal amount of money to make a return in your portfolio. So they all talk huge games, whether it's Elon, whether it's Sam, whoever it is. And so he kind of he started off asking him just things about have you seen higher powers of is there something spiritual happening inside the AI? Are they alive? Are they, and so forth? And kind of he was just kind of setting Sam up. And then, and then got to kind of, the belief system. How's the belief system set up in these foundational models in ChatGPT, right? If it reads everything on the internet, you can see if you look at the YouTube comments that the sum total of humanity is actually quite bitter and, argumentative and negative. And how does GPT train on all the world and then kind of end up being so politically correct and so forth? And it got down to the point where it's like, who inside OpenAI is deciding, what the belief system is of GPT? Is it you? I want names. Give me their names and titles. And then, of course, moved on to the copyright issue that's happening. I didn't mention before, but obviously all the data in the world needs to be consumed to get these models to the next level. And Anthropic's just lost a $1.5 billion class action over copyright infringement because they scanned in 500,000 books without paying the authors, and $3,000 of work. It's just been ruled to pay $1.5 billion. So there's a real compute cost there that's added on top with the training data. But yeah, I think there was a whistleblower inside OpenAI that was talking about potential copyright infringement or what have you from OpenAI. I don't know the full details of that, but then that whistleblower ended up dead. And I don't know if I probably should preempt people watching Tucker's interview, but it was absolutely incredible, the questioning that kind of came out around that, and asking Sam what he thought of it. And I don't know, I thought the average person on the street, if you kind of asked, did you kill someone? They'll go, no. And then they'll go, and then, don't be stupid, you're an idiot, sort of a response, but a way in which that was kind of, and I think Sam was completely thrown by the question, but it was kind of interesting how the responses came out.
I thought that was amazing, and as an interviewer, boy, I was just envious of Carlson because he nailed that. And I guess we should explain what was going on. Carlson was asking Altman about a very high-profile murder of one of OpenAI's employees, and Sam...
suicide.
Oh, yes, I'm sorry, murder or suicide. Could it be either? Sam tried to take the high road and show Tucker up and say, Tucker, come on, we're talking about the dead here. Don't you think we should have a little more respect for the subject matter? And he was trying to be the holier than thou. I'm going to put you in your place, Tucker, and make you look the bad guy. And Carlson just kept his composure so perfectly. And said, oh, gosh, Sam, you would definitely be right. It would be, frankly, very inappropriate for me to ask that question at anything less than the behest of his mother, who believes that you ordered his murder. So let's just skip to the chase, Sam. Did you kill him or didn't you? Or it was something almost that direct. And I thought, wow, I don't even fantasize about being that good at interviewing someday. On that note, let's end it there, Matt, because we are running out of time. Freelancer.com is an amazing platform. That is your day job. It is just phenomenal to me. You pretty much upstaged our entire episode 500 countdown with something that you do as a hobby. This is not even your day job. What do you do for a living in your day job, and how can people learn more about how they can outsource a whole lot of cool stuff at Freelancer.com?
Well, whatever you need done, we can do it for you at Freelancer, right? So we make it real. We turn your dreams into reality. Want to start a business, you want to grow your business, you want to find people to build a product for you. We have 83 million people around the world with every skill you can possibly imagine who'll get it done for you at a fraction of the costs, right? So you can just whack down a credit card and start the next, I don't know, maybe start the next OpenAI, start the next Uber for cats, pizza review site that delivers, whatever it is, you can get it done with Freelancer. And Freelancer.com, just post your project, it's free, give it a go, and you'll see the magic. And all the freelancers now AI powered and can get your job done, your product built, your service delivered, in a fraction of the time, fraction of the cost.
And I can definitely give a personal endorsement because I do use it regularly, and I would say it's not really a complaint, but the only really urgently needed repair at Freelancer is you've got to filter out how much you can get at a low price because it's overwhelming to the point that you just can't handle it. Don't pay $300 for a logo design. You will get 3 weeks of sorting through contest entrants before you're done. Matt, I can't thank you enough. We're going to wrap it there, and Patrick Ceresna and I will be back as Macro Voices continues right here at MacroVoices.com.
Now, back to your hosts, Eric Townsend and Patrick Ceresna.
Eric, it was great to have Matt back on the show. Always a listener favorite.
Patrick, we're getting great feedback on the new Trade of the Week segment. What's on deck this week?
Listeners, you're going to find the download link for the Postgame Trade of the Week in your Research Roundup email. If you don't have a Research Roundup email, that means you have not yet registered at MacroVoices.com. Just go to our homepage, MacroVoices.com, and click on the red button over Matt's picture saying looking for the downloads. Eric, let's go a little deeper into the AI bubble theme we just heard from Matt Barrie. Now, Matt raised some serious concerns about the sustainability of this AI boom. But what I've learned in almost 30 years of trading is that bubbles always go farther and last longer than any rational person expects. Shorting the bubble before it pops is a widowmaker trade. You can be absolutely right about the end game and still go broke along the way there. The time to press the short is after the air's already started coming out of the bubble. So the way I think about it is this. As Soros famously said, when he sees a bubble, he buys it. In the short term, the performance is chasing where the money is flowing. But because you know how it ends, you have to play it in a convex way with defined risk. instead of just sitting delta 1 long and fully exposed on the left tail. That's the lesson from Stanley Druckenmiller, one of the smartest traders of our time, who openly tells the story of buying billions of dollars of tech stocks near the top of the dot-com bubble, only to lose $3 billion in 6 weeks when the music stopped. So how do you apply that lesson today? A good example is NVIDIA. If you want to participate in the AI run, but with defined risk, instead of buying the stock outright, you could structure a bull call spread. For example, out to December 2026, you could buy the 200 call for around $10 and sell the $220 call for about $4.40. That's a net debit of $5.60. What does this give you? A maximum upside of $20 between the strikes, less the $5.60 you paid. So about $14.40 potential reward against $5.60 of defined risk. In other words, almost a 3-to-1 upside with no tail risk. That's exactly how you chase a bubble in a smart way. Convex exposure, defined downside, and plenty of participation if the mania continues running. So Eric, that's exactly how you chase a bubble the smart way. Convex exposure, defined downside, and plenty of participation if the mania keeps running. If anyone wants to look at this deeper, the breakdown of the trade is on page 2 of this week's chart deck.
That explanation worked for the pros, and of course our retail audience can get the full briefing by attending Patrick's Monday webinar, which always dissects the trade of the week in detail. MacroVoices listeners can get a free trial at bigpicturetrading.com. Patrick, let's start with equities as per normal. What are the charts telling you?
So Eric, at the time of recording here, the S&P 500 is trading at 67.53. The S&P futures closing exactly at 6,800. We continue to close at fresh new highs on this S&P as it relentlessly continues to climb. So there is absolutely nothing bearish to say technically on the trend. Old dips keep getting bought, higher highs and higher lows. Everything is working in the favor of the bulls. But Eric, when we look at this from a quantitative perspective, this is not only the longest rally in duration, but also the largest in magnitude that we've had without a 5% correction this decade. That's 100th percentile. At some point, we are going to just get a correction. It's just very natural that the market does that, and it's going to inevitably come. What are some of the things that are concerning from that perspective? Well, number one, we are continuing to see the breadth of the market deteriorating. We have only 55% of stocks trading above their 50-day moving averages in this environment. That's come off of a high of near 75-80% just a few months ago. Yet the market here continues to make new highs. It continues to show that the market is relying more and more on a fewer and fewer number of stocks to keep this going. Another example of that is looking at the financials, the quintessential beta 1 asset. They have put in their highs back in August, and we have not been able to see the XLF financial ETF make a higher high and hold it since then. And so we've continued to see that this market is participating pretty much on this AI boom, and the breadth of the market is not contributing. This in itself is showing that there is a weakness under the hood, and inevitably something will be a catalyst that will spur on at least a solid 300 S&P point correction in the 5% variety. We'll see what the trigger for that ultimately will come at.
Patrick, let's hit the dollar index. Plenty to talk about there.
Well, Eric, let's talk about that dollar, because the dollar has broken to a higher high. And we have now seen that trade range that was established throughout July, August, and September starting to be broken to the upside. Obviously, we had a brief little rip higher in late July that still hasn't been able to be beaten. But overall, we've seen the price action of dollar strengthening. We're now 4 or 5 days above its 50-day moving average. But it's not just the dollar index chart that's interesting. It's about the fact that the cross currencies are all breaking. We see a euro break to a little bit of a lower low, now consolidating below its 50-day. The pound sterling having had a failed rally here last week that couldn't beat its 50-day moving average and roll over. We had those surprise election results in Japan that sent the yen lower with the US dollar ripping to now almost 6-month highs against the yen. We have the US dollar against the CAD breaking out to multi-month highs. And so we're seeing that under the hood, we have a lot of these currencies where the US dollar is already strengthening. To me, this is very interesting because arguably so many of the asset classes from an intermarket perspective that have worked so well this year had the tailwind of a weak dollar. If the US dollar here begins some counter trend trade, maybe it's just a retracement, maybe it's not a new US dollar bull market, but some sort of a retracement that lasts several months and mean reverts a part of that loss. The question is that going to be the catalyst that spurs profit taking in so many of these assets that have worked so well because of the US dollar weakness? Nonetheless, watching here whether this US dollar breakout is for real.
West Texas Intermediate crude oil broke down to retest its May lows last week, but our good friend Dr. Anas Alhaji has a research note out saying the bearish narrative probably isn't right. So what comes next in the charts, Patrick?
Yeah, Eric. Well, looking at crude oil, technically, the price action is quite distributive. Lower highs, lower lows. Now, while we have bounced this week, we haven't been able to bounce back above the 50-day moving average, nor above its basic 50% retracement of the prior sell-off. So you still have to assume at this moment that this price action is distributive. But overall, we have seen a fair value zone established throughout the summer in this kind of low 60s area, and we haven't seen a technical legitimate breakdown out of it. And so in theory, this consolidation could see the oil trade back to the top end of the range and just stay dominant in this new fair value zone. In the end, there is no technical evidence that there's an imminent new bull breakout. That false start a few weeks ago kind of ended that very quickly, but I'm still looking at this very much from a neutral perspective.
And Patrick, needless to say, we've got to hit the gold chart this week.
Yeah, Eric, we do have to talk about gold. Like, what a rip this thing has had. We've now cleared the 4,000 mark and are completing the measured move by just simply comparing the length of the first part of the rally that happened in the first quarter of the year to the length of this bull impulse. So now we're in a situation where gold is pretty much starting to exhaust itself. And what's interesting is that silver finishing a measured move, platinum and palladium breaking out in this extraordinary way. We just have this amazing bull run in the entire precious metals market. So to me, this is balancing the long-term bullish perspective of precious metals, because I think that this has legs to continue in the years to come, doing incredibly well, and balancing that with short-term tactical strategies in terms of whether this is the time to accumulate more, or whether you need to wait for a pullback in order to reposition yourself on any precious metals positioning. As from my perspective, I think at this stage, there is very little asymmetry in starting any new buying here on gold. At some stage here, like we talked about last week, there's a potential at any point for a $200, even $300 pullback that would just be the new buying opportunity. I'm not in any way bearish, but I think there's lots of opportunity now to wait for pullbacks for new tactical entries.
Patrick, I can't believe it, but because I've been traveling all week, I'm actually out of touch with the uranium market as well. What's going on in the charts?
Well, Eric, let's talk about uranium. As I've said in previous episodes, we had a bear market that ended back in March and April from looking at it from the commodity price. And we've seen generally positive price action over the last 6 months, higher highs, higher lows, above all its moving averages. Now, this week, we finally got a breather, a pullback, and it's coming right to a 50% retracement, coming right back to the levels where the highs were back in June and July. This is a very interesting moment to see whether the buy on dip traders show up right in this sweet spot, because that is a typical area where you would see, if it was bullish, the dips starting to be bought here.
Well, Patrick, we were talking about whether or not copper was going to find some legs in its rally. Big breakout last Friday. Seems like the market's got the idea. What comes next?
Well, Eric, on that copper chart, we definitely are seeing short-term bullish price action. Every dip is being bought. Higher highs, getting above key high volume consolidation levels that were established earlier in the year. It's very reasonable to assume that we could be testing some of the highs that were established in 2024 and 25 up near the 5.25 to 550 area just above.
Patrick, before we wrap up this week's show, let's hit that 10-year Treasury note chart.
Finally, I wanted to just touch on that 10-year Treasury yield. And we continue to see is that the yields continue to make lower lows and lower highs, continue to reject a basic 50-day moving average. So you still have a primary downtrend in yields and a primary bull phase in bonds. We're going to continue to see whether that trend continues. But at this stage, it's very plausible to have downside targets near 360 to 380 on the yields.
Folks, if you enjoy Patrick's chart decks, you can get them every single day of the week with a free trial of Big Picture Trading. The details are on the last pages of the slide deck, or just go to bigpicturetrading.com. Patrick, tell them what they can expect to find in this week's Research Roundup.
Well, in this week's Research Roundup, you're going to find the transcript for today's interview and the Trade of the Week chart book we just discussed here in the Postgame, including a number of links to articles that we found interesting. You're going to find this link and so much more in this week's Research Roundup. So that does it for this week's episode. We appreciate all the feedback and support we get from our listeners, and we're always looking for suggestions on how we can make the program even better. Now, for those of our listeners that write or blog about the markets and would like to share that content with our listeners, send us an email at researchroundup@macrovoices.com, and we will consider it for our weekly distributions. If you have not already, follow our main account on X at MacroVoices for all the most recent updates and releases. You can also follow Eric on X at Eric S. Townsend. That's Eric spelt with a K. You can also follow me at Patrick Ceresna. On behalf of Eric Townsend and myself, thank you for listening, and we'll see you all next week.
That concludes this edition of MacroVoices. Be sure to tune in each week to hear feature interviews with the brightest minds in finance and macroeconomics. MacroVoices is made possible by sponsorship from BigPictureTrading.com, the Internet's premier source of online education for traders. Please visit BigPictureTrading.com for more information. Please register your free account at MacroVoices.com. Once registered, you'll receive our free weekly Research Roundup email containing links to supporting documents from our featured guests and the very best free financial content our volunteer research team could find on the internet each week. You'll also gain access to our free listener discussion forums and research library. And the more registered users we have, the more we'll be able to recruit high-profile feature interview guests for future programs. So please register your free account today at macrovoices.com if you haven't already. You can subscribe to MacroVoices on iTunes to have MacroVoices automatically delivered to your mobile device each week free of charge. You can email questions for the program to mailbag@macrovoices.com, and we'll answer your questions on the air from time to time in our mailbag segment. MacroVoices is presented for informational and entertainment purposes only. The information presented on MacroVoices should not be construed as investment advice. Always consult a licensed investment professional before making investment decisions. The views and opinions expressed on MacroVoices are those of the participants and do not necessarily reflect those of the show's hosts or sponsors. MacroVoices, its producers, sponsors, and hosts Eric Townsend and Patrick Ceresna shall not be liable for losses resulting from investment decisions based on information or viewpoints presented on MacroVoices. MacroVoices is made possible by sponsorship from BigPictureTrading.com and by funding from Fourth Turning Capital Management, LLC. For more information, visit macrovoices.com.